All right, and welcome back for another episode of Carnivore Trade. Today is Friday, August 19th, 2022. If you're not done so already, give the video a thumbs up, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. The cycle course is this Sunday at 12 p.m., so if you want to get in on that, don't forget to sign up soon. Outside of that, anyways, we have a down market for once, and finally, some decent volatility. So it's not crazy, it's not heavy volume, nothing like we've been looking for here. It is a little bit better at just under 50 million now at 3:15 p.m. So definitely better volume here, especially after that gap down. Overall, I wouldn't get too excited about it. It's nice to see some action though. And the reason why I don't want to get too excited is because it is Opex Friday. So these types of things are kind of to be expected, right? So we needed to pull back anyway. This market was way overbought, and it needed to pull back. I mean, let's just leave it at that, really. And you get those Opex moves. They had to use a little bit of capital, and that's why I was saying, like, let's not make too much out of any of these moves here over the last week or so, because the volume is very light. It's August, and honestly, if they wanted to, like one of my pet peeves is like, I see these guys on Twitter and stuff, and they're like, oh, the Bulls did this today, they played defense, or they, did that, and blah, 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 blah. And I'm like looking at the volume, and it's like, nobody's doing anything. It's not really like the Bulls did this or the Bears didn't show up. It's that there's nobody showing up. I mean, it's just retail and algos pushing the market around. And if they want it lower, it will take them, by the institutions, it will take them very little capital to do that. As you can see this morning, we had a slight uptick in volume, not even crazy, just a slight uptick. And look how easy they were to push it down. And they actually pushed it down pre-market. So that just goes to show you, when you get these light volume periods, it's very, I would say try to take it with a grain of salt, because it's so easy for them to just push it the other way or continue it with very little capital. So again, especially given that it's Opex week, we don't want to make too much out of this. We have Jackson Hole next week. That's what the market really cares about. But the market needed to pull back anyway. And we're getting that. I think we do see a little bit of continued downside. We'll have some support around 420 on the spiders here, but I think ultimately we're at least headed to this 20 period moving average. And I would think we have to fill this gap as well, though you'll have some support here at about 415, 417, which is kind of just under where that 20 MA is sitting right now. And then you kind of, again, that gap fill is kind of coinciding with that 100 moving average there on the daily time frame of the spiders here. So those are kind of your levels here. If we continue to pull back again, I would have liked a pierce more of that 200 moving average to kind of get more bulls on board, and to pierce that trend line too, to get more bulls on board. But we're going to get a pullback here. We may see one more push up here, and then I think we're going to see a lot more volatility come in to the market. At least that's how I've had it penciled in for a while here now. But overall, it's very interesting that the pullback happened. It's almost like the catalyst was Bed Bath & Beyond. I did my video yesterday before this all happened. I mean, it was already down big, but then, so we all know Ryan Cohen exiting, even though he had exited back here, but he officially exited, yesterday at some point, and then we gapped down after hours. So, crazy moves here. Another thing that's moving today, and we usually save this for the end, but this is important now, is Bitcoin. So Bitcoin is breaking this weekly inside bar channel. So here's your inside bar. We talked about this this past week. This 20 moving average is down sloping, and when it catches up to price, it's going to act like a rocket. So we're hitting that. We're not hitting it, but it's getting closer. And now price is starting to break down. You see there on the daily, nice little dump now below the 50 moving average as well. You lose this green bar low, it could get ugly pretty quickly. But again, it's still Opex week, so who's to say that after 8 p.m. tonight they don't pull a fast one and bid this back up? So you got to be careful of this type of environment that we're in. But a nice little dump there on Bitcoin, down almost 8%, Ether down almost 8 as well. So breaking that 20 moving average, now starting to do a little bit of technical damage here. You want to see it hold this green bar low. So 1656 spot 03, that's kind of your area here in the short term. And then you'll have some support right here at this green trend line as well. But nice little dump here across the board on in the cryptos. You see Doge getting a good hit, polka dot. So all, pretty much across the board kind of leading to the downside. And the reason why I'm kind of leading with this today is because, and Bed Bath & Beyond to an extent, because we're not seeing, this is the risk on, right? So everybody's starting to say now like, oh, the low is in. And if the low is in, then why are the risk on names getting hit so hard? ARK is kind of following Bitcoin right here as well, kind of breaking through this channel here. And we've been talking about ARK a lot this week, and for a reason, but 4 red days in a row and through that 50-day moving average. Now, again, it's Opex week. They could pop it back up Monday. There's nothing to say that that can't happen, but this is, we're doing technical damage on these charts. There's no way around that. So I find it hard to believe that we're in a risk-on environment with these plays, these names not moving higher. Let's take a look at Tesla today as well. Yeah, Tesla's, was getting hit a lot earlier, but this is holding up okay. So that's not quite broken yet. But the semis here, I like to see the semis lead because they are a leading indicator, and they are leading to the downside again. So here's your candle from the 15th. And we really haven't done much since then. Here's August 4th. You made a little M top. We have a possible little M pattern here on the semis starting to build up. And if we look at the triple Qs, they started, here is your candle here on the 16th and 15th. You had a higher high there, a much higher high. Same thing on the spiders, much higher high. I mean, like way higher high. And even like the Russell, just pretty much went straight up in that period. And we're seeing the semis kind of lag. I never like to see the semis lag here, because they are a leading indicator. So anyways, possible little M top there. Doesn't look like they want to get up to that 250 area right now. Now it could put in a higher low. It still could put in a higher low. Let's be clear on that. As long as it stays above this pivot here. But for right now, a little bit weaker. I thought yesterday was going to be the higher low, and that pretty much got completely faded here today. So a little bit of a concern there overall. IGV also pulling back, basically holding that gap fill. It's not quite down to that area yet, but it's close. And it tagged that 20 moving average today. So cloud weak, semis weak as well. Not a really good sign overall. In biotech, we've been talking about that. That kind of led to the downside, right? So we talked about that yesterday, how that kind of, broke bearish and kind of divergence with the rest of the market. That's basically testing this little breakout bar low here at 86.13. So it's pretty close to that as well. So a little bit of weakness in tech. And again, tech, you want to see the NASDAQ lead. You want to see, ARK lead. You want to see Bitcoin lead. And we're not seeing that right now. So little red flags going on. Again, you still got to take it with a grain of salt because it is Opex week. But I mean, next week will be pivotal because we have Jackson Hole, and that's going to move the market for sure. They are bidding us up a little bit off the lows here. Again, I think today was mostly kind of like a 422 to 423 kind of Opex pin. So they've pushed us down, pushed us sideways, and then we just kind of been stuck in this range here for the last 3 hours or so. So, let's not get too excited about the sell, but, it's definitely a good sell, and we're seeing some technical damage done on a lot of these charts. Reason for the NASDAQ lagging so much here, take a look at the 10-year. So we've been talking about rates pretty much every day here for a reason. Big gap up on the 10-year, above the 50 moving average. This can gap and go. We just gapped above resistance. If this gets above that red bar, watch out, because yields could continue pushing higher, and that's going to put pressure on tech. And again, like we've been saying, the bond market's calling BS on the rally, and the fact that yields have been going up with with the stocks going up, generally, that's kind of a diverging indicator, right? Or a diverging development. You see the 30-year as well is above that red bar high, so that is continuing higher. The 2-year is red today, but the yield curve is steepening just a little bit, so that's kind of your positive there. It's still way inverted, but the 2-year is down less than the 10-year, but it is red nonetheless. So again, some bond market's still saying there's something wrong here, and that's why I'm not in the camp that this is anything but a bear rally. And I made that clear the entire time that we've been in this. Some people are starting to flip bull. Okay, flip bull if you want, but I've been calling this rally, and we've had the rally. It's gone a little bit higher than I thought it would, but I'm still not convinced of it, and I think the bond market is on my side on this. By the way, speaking of complacency, market's getting hammered today. Where's the VIX? So, I hear everybody saying, oh, the Furus on Twitter are calling for a crash. And yeah, they're out there, but like if they were, or if, supposedly we were, over positioned to the short side, and why isn't the VIX spiking higher today? So we're still seeing some complacency in the market. And yeah, I guess we'll just leave it at that here. We'll be waiting on next week. Anyways, let's get back into it. We talked about rates. So home builders here taking a hit just like everything else. Down almost 3%. So a nice move down there for XHB. ITB went into this kind of green bar, filled that gap, tried to consolidate a little bit, and then kind of pulled back today, obviously. So that's a little bit on the weaker side. This probably wants to go and fill this gap here from the 9th. So again, could still put in a higher low. So nothing, nothing to say it can't, but nice weakness there in the home builders VNQ. Same kind of deal. We went up into this 102 area, and we talked about this. In addition to interest rates, we have the gap fill right here and the necktie between the 20 and 100 moving average, or I said, not interest rates, but financials. So look at all the gaps on the daily time frame there. So these can get filled pretty easily. So BNQ, nice pullback here for now. It will have some short-term support there at the gap, the 100 and the 20. And then you'll have this gap here, and ultimately I think it's going to go back down to about 94, 95. But nice pullback there, just like the rest of the market. And then XLF here, nice little sell-off today. Again, this one got really overbought. Again, look at these gaps here. This is leaving on the chart. Those are going to get filled. That's why I said, don't chase this up here. I would not be a buyer. This is probably going to back test that 33, 34 area very shortly, if you ask me. And then broker dealers, which have been the powerhouse, seems like every day we talk about how it's just been defying gravity. Finally getting back below this pivot with a pretty good sell bar there. So you'll have short-term support at that 220 moving average, right in that zone there. But ultimately, I think this comes down and back tests 420. I think that's where it wants to go. Again, no supports here. You just straight up and no consolidation or anything, so they can take this down just as fast as it went up. So just be careful of that. All right, so let's get over to energy. So crude had kind of a choppy day. It was all over the map. It was getting a little bit of a bid early in the morning and then kind of faded here. You can see it faded pretty much all afternoon. Got a bounce and then rolled over just a little bit. Again, still looking for this to make one more low, and then we'll get in XLE. Nice little bid today. OXY here. Got some news out of that. So Buffett, Berkshire got approved to take a 50% stake in that. Huge volume there. So congrats to OXY bulls. I wouldn't chase it up here though, so just be aware. This is still very overbought, and you are still into a lot of monthly resistance. So I still believe this needs to do a lot of backing and filling. It's very extended still from that 20-month moving average. So, just be aware, don't chase it up here, but it's holding up well. The trend is up. It's a strong name in a market that's been in a bear market really mostly all year long. So OXY holding up well, and obviously XLE getting a nice bid. Although XLE didn't really pop on the news. I mean, it's not really doing much. You can take a look here intraday. Maybe this is Opex related or whatnot, but XLE just kind of hanging in there. XOP, kind of an inside day, actually red on the day, so a little inside day there on XOP. And then OIH, this one's not going to break above that inverse head and shoulder pattern unless it gets a monster bid in the next half hour. So I would consider this a failed pattern here. And you could even make a case that, and this is kind of you almost have like a bear wedge here. In fact, that is a bear wedge. So weekly time frame, a little bit of a bear pennant there. So we'll be careful with OIH right now. I don't like that failed pattern. Doesn't mean it can't trade up a little bit. It's still hanging in there okay, but I would be careful with it for the time being. Nat gas holding up okay. Again, it's strong. It's extended. Yes, it's overbought. Yes, but it's holding up. So I wouldn't short it here unless it gets mega extended. Probably above $10 at least. But overall, nothing to really do there right now. Dollar index, strong day for the dollar. So again, we talked about that weekly trend line last week. It pierced it. We closed back above, and then huge bid. So I think this wants to go to 110, honestly. There's a chance it can make a lower high, but this is a power move, guys. I mean, look at the size of these green candles. So look at the pullback candles, how kind of tight ranged a lot of them are. And then look at the size of the breakout candles, starting right here and then right here after this fake breakdown. So dollar index is strong right now, and that definitely needs to be respected. Gold here, again, dipping down. We'll see if it hits that trend line. We talked about that yesterday. That would also kind of coincide with this little pivot high right here. So maybe gold does have a little backing and filling to do. I think, you know, again, we talked about this. They usually hit gold into Opex week. It just always works out that way. Just use it as an excuse to be a punching bag every single time. But in any case, you know, we'll see if it can put in a higher low. I still think it does have a higher low in it. So no real problems right now, but it is pulling back here with the higher dollar. And then silver in a little bit of kind of trouble here. You know, it started off as a little pullback, and now it's starting to be a pretty good dip. So this should hold that, kind of have these pivots right here, and this is where you broke out from, around 1880, 1885. We should get some support there on Monday, but silver in a little bit weaker technical shape. Let's look at SIL again. Yeah, so this has got to hold that 24 handle here. Otherwise, I'd say that's susceptible for a move lower. But I think it does catch its footing here. And then again, we do have Jackson Hole next week, so take that into account. Platinum also coming in, but getting off the lows a little bit here. I still like this one on the bigger time frame, so I don't have any issues with it at this current time. Palladium, another kind of nothing burger day. And then copper here, actually holding on to the, you know, it's actually holding up well, even with the strong dollar. So copper is actually showing a little bit of relative strength. We'll see if it can make another push here in the coming days. We already talked about Bitcoin. It's still dipping lower right now. We'll see what it does over the weekend. It wouldn't surprise me if they reversed it all of a sudden. So they tend to do these things into Opex, and then, you know, after Globex closes and we get that light volume weekend, you know, there's nothing but retail traders. They could push this back up. So we'll be watching this for a fake breakdown. So that doesn't mean I'm expecting one. I'm just saying be on the watch for it, because it is Opex week and you got to take these moves with a grain of salt. But anyways, let's flip back over to the spiders. Markets close in about 30 minutes here. So we're getting a bit off the lows again. This is kind of what I said. I didn't think that this would be a real breakdown here. I know we started to inch lower, but it looks like more of an Opex pin type of day. Markets are kind of hanging in there at the moment. You see volatility coming in a little bit. We'll look for a continued pullback here, but there are some red flags pretty much across the board. Semis, you know, volatility not really getting a bid here despite the markets being down 1.5 at one point today. And of course, the bond market. So anyways, guys, going to wrap it up here. Don't forget to sign up for the Cycles course. Come find me on carnivoretrades.com, and I will talk to you all next week.